Hey, how's it going, guys? I'm going to go over the charts. We're going to talk about a macro move for a potential long position and talk about a macro move for a potential short position. And those, when one confirms over the other, it's going to pretty much tell us what we should be doing with our holdings as well, or at least what I'm going to be doing with my holdings. If we end up losing a critical level of support, and it acts as a form of resistance, then it will be kind of like an Armageddon style drop. If we end up breaking a specific level of resistance, it's going to be the exact opposite. But based on historical evidence, based on the macro analysis on chain, this is actually a normal pullback that we're going through right now in preparation for a much larger pump. So I'm going to show you what I see in the macro and in the short term so you can give your own analysis and give yourself an idea of what you want to do with your own trades. All right, cool. Let's dive into it and I'll show you what I see on the inside. Okay, so this is the Bitcoin chart on the 15-minute time frame. I'm going to go over this morning's trade that we did on the trade hunting call. So this morning we traded off of basically a descending head and shoulders structure that came and confirmed after a loss of this critical level of support right here. So if we look at why this is a really important level of support, you can see that we had it act as resistance here, support here, and I can keep going back for a month and a half of price action reacting off it as forms of resistance and support, right? And support here. And just keep on going and going. Resistance, support, resistance. You know what I mean? So you can see that we're consistently respecting this level as a form of resistance and support. So we knew if we lost this level, that it would pretty much give us a high volume reaction. So normally I wait for a 15-minute candle to close because the 15-minute time frame is like a dissection of the hourly, and we have a lot of participants that jump in on a reaction of a candle close on the 15-minute time frame. But this time we did in the 5-minute time frame because normally after losing a level like this, it comes volume backed and it would have eaten away a lot of our risk to reward ratio. So we jumped in on this candle close because when this candle closed, it validated this being lost as a form of support. We didn't just touch it and bounce back off of buy orders. We actually got right through it and closed. So we confirmed a loss of support for not only this head and shoulders, descending head and shoulders, because if this bounced, this could have easily turned into a falling wedge structure, right? But it didn't. Instead, it confirmed it as a head and shoulders. And when that candle closed, we jumped in, put our stop loss above the most recent swing high here. Normally we'd put it up here, but we're going on a 5-minute guard. And if price action came back up to this level, it would have been an invalidated trade anyways. So we put our stop loss above this little wick, and it was about a 0.58% loss. So that allows leverage. And then we were targeting the structural value area low, and it actually ended up going much further than that. And we actually had a high volume drop with this after we got in. And normally with high volume drops, it has the opportunity to fill a lot of limit orders in the order books. And it sometimes will create a reaction where it causes like a bullish reaction where price action will come up just as quickly as it came down. Same thing kind of happens when we pump, right? We come up and we basically come down just as quickly and drop just as hard, especially if there's no, if we have a volume gap in that area. So I closed half once this candle closed. And when that happens, what ends up occurring when you close half, if you're uncertain about something or if you're a newer trader, it's always safe to close half past your 1-to-1 in your risk to reward ratio. In this case, it was past it. We gained 0.67% times the leverage. And if it came back up and hit our stop loss, we would have came out profitable because it outweighed how much we were risking to lose. So if there's ever a time of uncertainty, it's never a bad call to close about half your position, so long as you're past your 1-to-1 risk to reward ratio. This was originally a 1-to-2 risk to reward ratio trade. And once we came down, anyone who stayed in with the remaining amount of their funds past the target, as soon as we caught a lower low right here, right here. You can move your stop loss from this location to this location here. And same here, we came back up. We didn't hit that stop loss that we would have moved it to, and got another lower low. So you can move our stop loss here, and we got another lower low here, and move our stop loss here. So this is basically the opportunity to, this is when you basically, when you see price action constantly creating legs like this, you can evolve your stop loss and chase the price action. And maybe, you jump into a trade thinking that's only going to last maybe an hour or so, and it ends up taking, the entire day, maybe even a week. And this is a good strategy to like basically chase the price action without moving your stop loss too close and end up getting stopped out when you could have chased a lot further down. Anyways, so that's basically this morning's trade, and some people are still in it based on what I just told you there. But now what we're going to be looking for is potential long position. So what we want to see for potential long, we got this structural value area being honored after we got acceptance back inside this value area. I just got to wait for my fixed range here to populate. It's not updating the data. But anyways, where I have my little lines here is the value area of this consolidation area right here. And once we got acceptance into it and we couldn't get out and we got rejected and came down, got low, we basically, price action told us that we're going to be staying inside this value area. And now we're at the value area low of this structure. So we just want to see a break of like downtrending momentum, which would be from this point here to this connection here. And we can actually, I'm going to change this to a white trend line so it's easier for you to see. So if we break this downtrending momentum here, we can prepare for a potential long. So we just came up recently here and just hit it as resistance. And if we end up building, a bottom here, and we end up breaking this level here, that would be a change of character that we'd want to wait for a long position. The only thing I would fear for this long is that this dotted blue line here represents the point of control for this area, and a little bit higher risk to trade near a point of control unless you see that we got acceptance above it or below it. If you're in a short, wait for acceptance below it. If you're in a long, wait for acceptance above it. So rather than just waiting for a candle to close above this area and risking the POC acting as a form of resistance, pushing us back down, we want to wait for a candle to close above the point of control as well. And then whatever swing low guard that we have, we can use for our stop loss. And you'd first want to target the consolidative value area high here, this dotted line here at 64,887. But if we don't get a negative reaction to it like we did here, and it was breaking past it, then you can stay in your trade. But I'd also watch this uptrending level of support here. As soon as we lost this and we confirmed it as a form of resistance, it can act as resistance again if price action comes up. And if it does, we could end up building like a head and shoulders type behavior if we get that like a rejection off this uptrending level of resistance there. So just something to be mindful of. I know like a head and shoulders don't normally play out after a drop, so I'm not convinced that that's going to turn to a head and shoulders. I'm actually more positive in my bias right now than negative. I know we just had a giant drop, but I'm going to show you the macro structure and why I think that this actually might turn into a double bottom based on a previous fractal. So if we get an early entry off of a lower time frame double bottom, it could allow us to front run a larger double bottom here, and they're very, very good reversal patterns to trade off of. So let's get out of the 5 minute and go into the daily really quick. So I want you to look at the daily candles here on the price action. We can see that we are building a very large double top, which is a very bearish sign. But this always seems to happen near previous all-time highs, like historical all-time highs, like right after a halving event usually, but this time it's going to be coming in confluence with the halving event. We got one coming up in 4 days, so it's going to get pretty wild pretty soon. Anyways, here's why I'm bullish, not bearish. So if we end up having price action play out like it always has at previous all-time highs. So when we're trying to, like Bitcoin right now is trying to build the previous all-time high here as a form of support, right? But people are exiting the market. A lot of long-term holders are exiting the market right now, and a lot of new short-term holders are coming in. aka unfortunately it's the dumb money, right? So a lot of new buyers are coming in, and the whales are basically selling to them, and this kind of creates a huge influx of retail buyers that will start to come in, and we pump for the last giant pump of the bull run, basically. If we go back to the previous cycle relative to this, where we are now, right here is what I'm also talking about. We had a double top forming, and we undercut the neckline a bit. And rather than coming down, we created a new high and confirmed a continuation of a bull run. And if you look to the past, this is when we were trying to build this previous level as a form of support that was recently resistance. And if we go back to the last cycle before that, same thing. It's not as clean because we have a lot less liquidity back then, but we were trying to build this as a form of support, and we ended up building a, let's see, yeah, we got a double top. This one played out, and then we actually had the continuation. Once we got that higher high, it brought us to these crazy levels that we saw back in 2017, sorry. But yeah, anyways, so I am preparing for a potential recreation of these fractals where we have a bearish scenario start being built, and then it goes to the moon right after. We have the halving event coming up in 4 days, so the supply is going to be the supply creation from the miners is going to be cut in half. So I think the sell pressure is going to be reduced from miners. We already don't really have that much of a problem like we used to because BlackRock is buying from miners, not selling on market like we usually have. So maybe this time it's going to be a little bit different. We do have a bit of a sell pressure coming in, ever since the eclipse. But what I want to wait for a bearish reaction is to have a candle close below this neckline and see it act as a form of resistance on the lower time frames. And if we hit that new low, then it's going to confirm this as a double top, and then we'll probably drop pretty hard. I'm not convinced that we're going to drop below this uptrending momentum. If you see, this uptrending momentum has been holding us up since Bitcoin was at 25K. So I think we're going to have a strong bounce here if we do confirm this as resistance. If not, we could either A, consolidate here until basically the halving event occurs, maybe even longer, because if you look at the past, this was the last time we had the halving event. If anyone of you guys were trading at the time, this is the structure that we were having right at the halving event. We had this drop. Then we consolidated for a very long time before we had the final candle that broke this resistance and brought us out of this macro area, and we end up having it as a form of support. And this was the candle that confirmed the big run right here. But yeah, that's pretty much it, guys. So that's the short-term combination with the macro price action that I'm looking at. So I just want to see, in terms of the short term, if I want to get in on the long position, I want to see price action basically honor this level here as a form of support in confluence with the break of downtrending momentum, the change of character, and a close above the point of control, and they'll be entering along to try to front run a larger double bottom formation while watching the structural value area low as a form of resistance at 64,887 and the uptrending level of support as well that just recently flipped as resistance and can still maintain itself as a form of resistance. So until we get some distance away from this line, it's going to stay on my screen. And that's pretty much it, guys. If you have any other questions, you can reach out to me in the Discord. I'm also going to encourage you guys to comment as well in the YouTube section down below. If you have anything that you want me to talk about in a YouTube video, I'll jump into I'll jump into the studio, press the record button, and talk about that subject, whether it be risk management or anything along those lines. I would love to help you guys out. All right, guys, that's pretty much everything. Have yourself an amazing day. Please subscribe. It helps out the channel. It's free for you, and it helps us out a lot. And yeah, that's pretty much it. Thank you. Bye.
Hey, yo, I'm all about the crypto. In case you don't know, it's the hedge to inflation, the craziest sweep on the nation. No baby, every blockchain ain't created the same, but the learning curve feels like a knowledge to the brain. Let me enlighten ya, let me enlighten ya. React to the max and return